I've gotten questions about what's the best retirement portfolio. The answer to that question is that there is not a best retirement portfolio. Everyone's situation is different. Some people need to focus on income from their investments in retirement, and other people still need to try to grow their retirement account. So the goals of an investor will determine the best portfolio for them, as well as the amount of money they have, how old they are when they retire, other income streams that they have. There are so many factors. There is no best retirement portfolio. I will share with you, however, what I do now with our retirement portfolios. I'm quite happy with what I found and what I'm doing after several decades of investing portfolios. And I'll share with you the criteria that I have to have in place in order for a portfolio to be what I would consider the best retirement portfolio for us. And this is probably quite different from what you're going to hear elsewhere or what you were expecting. You're probably expecting to hear something like the best retirement portfolio is to put 40% in the S&P 500 and 20% in an international stock fund and 30% in treasuries, all index funds or something like that. And if you Google it, that's probably what you're going to find. That's not what I've learned to be the best case during my decades of investing. So I'm going to share with you the criteria that I looked for in finding the best retirement portfolio for us. The very first thing I need to see in determining the best retirement portfolio for us is I need to see historical return data. I want to see how this particular portfolio fix or strategy worked back throughout time. And I don't want to just see an average that's lumped together, and I don't want a 5-year average or a 10-year average. I want to see really good data on how the performance has been during the time that this has been tested. Now, I will go beyond that and say I'm okay with back testing, and let me explain that. Because the retirement portfolio that I use is invested in ETFs, we can use index funds to back test data. Companies that put out portfolios and produce portfolios and funds and such can do back testing on anything that is index related, as long as there was an index that existed during the time frame for which the back testing was done, whether that's 20 years or 50 years. So I want to see how a retirement portfolio strategy that I'm considering has performed in the past, and I'm fine with it being based on back-tested data because I invest in index funds through ETFs, and that works to explain why backtesting is okay. If you want to know more about this, please leave in the comments section below that you'd like to hear more about this or anything else in this video that I talk about. I want to talk about the things that you, my viewers, want to know about and enjoy, and sometimes I just touch on something, and if you want to know more about it, let me know in the comments and I'll do a video on it. Okay, the very next thing that I look for, I want to see long-term results at least by year, if not by month. I don't want an average annual return that's been added together for 5 or 10 years, and then it's divided by that 5 or 10 years, and I have just an average. I want to see how much the portfolio has gone up and down in the past, because that gives me really great information about the volatility and about the swings in the value of my investments going forward. Now, we know the past is going to be different. Absolutely, we all know that. We all hear that disclaimer from financial firms. But we can use past data to show us how a strategy performed, how volatile it is. So I want to see that data by month and or by year at least, so I can see the swings in the value. And what I really want to see is how far it dropped from the highest point. And you can do that when you have monthly data versus annual data. The next thing that I want to see in choosing the best retirement portfolio for us is I want to see 25 years worth of performance data. Longer is better, and I'll explain this more later in this video. Don't give me 5 years or 10 years, give me 25 years, especially if we've had a really bad financial crisis or bear market in the past 5 or 10 years. I want to see much longer than that. The fourth thing I want to be able to do is I want to see, and I touched on this one already too, I want to see the drawdown. That just means from that highest point where the investment, the portfolio was, I want to see the drop down to the lowest point. Like, how bad did it get? Did it experience a 20% drop, or did it experience a 40 or 50 or 60 or 70% drop? I want to know that information because that conveys to me how risky a portfolio is. And granted, going forward, it's going to be a little different, but that gives me a really good feel. When I look at a fund or a strategy, and I used to analyze hedge funds, and I would see huge swings in volatility, it may be that all their great performance came from 1 year. I don't want to see that. I don't mind the swings, but I don't want it to be extremely volatile. And when I can look at the drawdown, I can assess that. So I want to know how much risk I'm getting into, especially with a retirement portfolio. Fifth, the best retirement portfolio for us is going to be one that is very low cost. It's low cost to implement, and it's low cost to own. So for example, the ETF rotation strategy, I buy the ETFs for free myself. It takes me about an hour a month, not even that usually. And to own the ETFs, they're very, very cheap. Some ETFs have a little bit higher fees than others, but most of the ETFs that I purchase are extremely cheap to own. The next thing that I want to look for in finding the best retirement portfolio for us is that it has some form of inflation protection built in. Inflation is a real thing. You may want to check out my other video that I did on retirement advice, and that is to plan for inflation. It's there, it's here. Every year prices go up, and if we're looking at a decade of 2 or 3 decades of rising prices every year, our expenses can absolutely double during retirement for the exact same services and things that we buy. So I want to see something in my portfolio that will protect me from that during retirement. A bond portfolio, for example, with fixed interest, that's not going to be okay with me during retirement because it's not inflation protected. I want some kind of inflation protection. The seventh thing that I look for in finding the best retirement portfolio for us is I don't want a fixed asset allocation model that stays the same no matter what happens in the economy and the environment, with interest rates, with the stock markets, stocks overvalued, undervalued. I want something that's more tactical than that. I've done several other videos on this, and if you want to know more information about it, please leave a comment in the section below where the comments go. I can talk more about it, but basically I'm not a fixed asset allocation buy and hold investor where you put just 60-70% into stocks and the remainder in treasury bonds. That's not my thing. I think that when we invest like that, we miss the opportunities that come from low valuations, and we participate in higher risk that comes from overvaluations. So I think it's important for me to be more tactical with my investing. It just makes more sense to me than using that really, really overly simplified 60-40 or 70-30. I'm going to hold this asset allocation no matter what. And the reason it's so important, I think in retirement, or even over 50 or over mid-40s maybe, is because you just don't have that many years to invest. When you're in your 20s and 30s and maybe even early 40s or into 40s, yeah, you do have time for those gyrations, that strong volatility that occasionally happens in the markets to ease out, to play out. But we know that in retirement, you don't have as many years for that to play out. And we also know that as of this recording, again, as I've touched on, that long-term 40-year cycle and declining interest rates that have helped stocks and bonds perform so well, it's over. And so going forward, maybe those fixed asset allocation models, they've worked great the past decade or two, but maybe they're not going to do so great going forward. So I don't want that with a retirement portfolio. That would not be the best solution for us. The eighth thing that I look for in determining the best retirement portfolio for us is I want a strategy that rotates out of the stock market when stocks are starting to tank. And this is related to the last thing that I look for, the last criteria that I gave you, where I'm not a buy and hold investor. I want to rotate out of stocks and into cash or some other defensive asset, instead of just saying I'm going to keep these fixed allocations. We know from the studies that have been done and the math shows us that sequence of returns risk is real. If there's a bear market in the year shortly preceding or following retirement, it can greatly decrease the chances that you have of your retirement funds lasting you for life. So I don't want to hold stocks through bear markets. I don't mind the low 20%, maybe 25% declines. I don't want to hold stocks through those 50, 60, 70% declines that I saw in the first decade in the 2000s. No thanks. That would not be in the criteria that I'm looking for the best retirement portfolio for us. The next thing that I'm looking for in choosing the best retirement portfolio for us is I want to see a demonstrated history of good performance despite periods of bad financial times, whether that's things like the Great Financial Crisis, things like bad recessions, things like really high interest rate, really high inflation, and even black swans. They all happen. They all happen. I've experienced them all multiple times, most of them, many of them, in my investing, I don't want to say career, because I do this just as a person. I am an investor. I'm not selling wealth management services, but during my investing decades, I've seen all these things happen, and I've seen the effect that it's had on our investments. So I want a retirement portfolio that will survive these types of things happening again. I don't want to just look at a decade that didn't have any of these horrible things happening and say, oh, well, the performance was good, or 5 years that were easy. I want a portfolio that makes money when times are bad as well as when times are good. And granted, there is no perfect portfolio. Everything I look at, the portfolios that I invest in, they have losing years, absolutely. But overall, during the time frame that I think we'll be investing in these retirement portfolios, that they overall have gotten the results that we want to see based on our own financial goals within our acceptable risk. And that's really what it comes down to. The best retirement portfolio for you is one that has the returns that you need so that you can live the life that you want within the risk that you're willing to accept, because that will allow you to be happy and be at peace with your investments. Remember, retire certain.